All right, welcome back to another episode of the Black Bullion Show. Peter Schiff just put out some great articles this week that I hope you guys will take some of the time out to read. As always, I'll put those links in the description. And before we get into that, if you're new to this channel, please hit that big red subscribe button right down below. Also, please hit the like button. Helps to get this economic evangelism right on out there to the masses. Okay, so as you guys may know, the government has been conducting a fool's errand in recent decades. In order to stimulate spending, which grows the economy, they put certain practices into play. One being artificially low interest rates. The idea is that with these low rates, people will not be satisfied with just saving their money and will be encouraged to spend it. Another tool is economic stimulus via money printing. However, this flies in the face of the relationship between production and consumption. Check this out. Just going to read this quick quote right here from the Schiff article. But this approach ignores the process of creating goods and services. One undeniable truth is you have to produce before you can consume. Shostak offers a simple example, and he quotes, "For instance, when a baker produces bread, not everything he produces is for his own consumption. In fact, most of the bread he produces is exchanged for the goods and services of other producers, implying that through the production of bread, the baker generates an effective demand for other goods. In this sense, his demand is fully backed by the bread that he has produced." All this does essentially, and what I mean by this, I'm talking about the money printing, etc. All this does is devalue the dollar against those products that you buy. For example, there could be a one-to-one relationship between a dollar and a gallon of milk. And now, years later, that relationship could be 2-to-1 or maybe 3-to-1. You still have that 1 gallon of milk. That gallon of milk did not change, but it takes more dollars to get that gallon of milk. And another relationship like that with the dollar that I think of quite often, it's this one: gold. In fact, it used to be 20-to-1, a 20-to-1 relationship. So it took this guy right here, just one of these guys, $20 bill, to get one of these guys. Now, it takes about $1,722 in order to get one of those ounces of gold. Same gold, new decrepit dollars. Check this out. Here's a quote from this article. "Last week, we reported Yale, mainstream again, guys, Yale economist Stephen Roach's warning that the era of the U.S. dollar's exorbitant privilege as the world's primary reserve currency is coming to an end. Roach isn't the only person in the mainstream sounding the alarm about the dollar's demise. In a note published last week, Guggenheim Investments Chief Investment Officer Scott Minerd said that while there are no signs the world is questioning the value of the U.S. dollar right now, it's clear that the greenback is slowly losing market share as the world's reserve currency. As he said, buying gold is the key to offsetting the dollar's decline. With the Fed going all in on financing the government deficit, the U.S. dollar could be at risk to negative speculation of its status as the dominant global reserve currency. Investing in gold may help offset this trend." So with that, as long as our government overlords continue to devalue their fiat currency, I will continue to get these babies right here. Got a gold ounce and also got a silver ounce right here. Let me know what you guys will do. Are you guys going to continue to get these guys here? Are you guys going to convert these dollars into the real deal? Let me know in the comment section below. Thanks again for watching. Please hit the subscribe button. Also, please hit the like button. Thanks again. It's Black Bullion.